that's something that I would encourage a lot of investors to do. At least, like, I found myself that I bought these things and just kind of put them on the shelf and never really tuned into them again. I mean, I was managing them and like hands on, but as far as the financials, I should have paid closer attention, or I encourage other people, like, watch the value of your properties and watch, if you're able to refi or, do a loan modification for a better rate because the interest rates have dropped, 2% since you last got the loan. Look at stuff like that. And I'm not saying go crazy and over leverage and just pull out every penny you can, but be aware of what you have for equity and what your options are. Because I probably could have done that refinance my existing properties a year or two before I did. It just never even crossed my mind.
Yeah, that's brilliant.
You're listening to the Just Start Real Estate Podcast. If you're serious about your real estate investing business and need real answers, you are in the right place. And now, your host, Mike Simmons.
Hey guys, thank you for joining me on the show. I appreciate it. Thanks for being here. I am excited to have you, so hopefully you're just as excited to be here, and I've got another great one for you. That's right, guys. We are on a streak of years now of me bringing on only the best guests and the most exciting people to talk to, and I'm excited about my guest today. He has done a lot. We had a great conversation. He started off in the electronics manufacturing industry, running around, living in all kinds of different countries, and just an exciting life of a single guy and young guy, and kind of didn't really matter if he lived, in China for a while, lived here, lived there. He had that really cool lifestyle, and then he decided he needed a little bit more stability, wanted to have a family and all that, and just kind of living in all these countries didn't really suit him, so he got into real estate, and he started off like, a lot of people. He bought a rental, and that kind of got him going, and he started doing the BRRRR strategy where you buy, renovate, rent, refinance, repeat, right? He did that, and he really explained how he did that in a way that anyone can do it. There's really no excuse. And now, fast forward, he's living in Maui. He moved from Maine to Maui, and he's hanging out with cool guys like my buddy Brandon Turner, and Brandon's company, he works at Brandon's company. He is the VP of acquisitions, and they basically buy mobile home parks around the country, and they're just buying tons of these things and bringing in investors and building this great company, and he's just done a lot in his life, and he's a really cool guy. He's a broker, owns his own portfolio of rental properties. He still owns them, got a ton of doors. Just a smart guy. I loved bringing him on and getting that diverse background and what he's up to now and raising money and buying mobile home parks, but tons of information about how he got started and just that whole bootstrapping mentality that I know a lot of us love to hear about because it makes it feel so attainable and real, and this is no exception. So my guest today is Ryan Murdock, and I can't wait for you guys to hear this interview. It was a lot of fun. I think you're going to get a lot out of it. So without any further ado, let's jump into that interview and talk to Ryan Murdock. All right, Ryan, thanks for being on the show, man. I appreciate you taking the time to do this.
Yeah, good morning, Mike. Thanks for having me on.
Yeah, for sure, man, for sure. So I want to dive in. You've done so much, and I really want to talk about a lot of this because I think a lot of what you have done really is going to resonate and be interesting for the folks listening. But before we get too far down that road, let's rewind. Let's talk a little bit about your pre-real estate life. What did you do before real estate, and what made you get into real estate in the beginning?
Before I was into real estate, I was in the electronics manufacturing industry for, 10 plus years. And I was just kind of I think that's kind of where my mercenary nickname started, was I was just kind of the roving technician who I would travel around to various production facilities that the company owned. I spent a lot of time in Mexico. I ran around Southeast Asia for a while, lived in Singapore, lived in Hong Kong. Traveled to China. So yeah, anytime there was any sort of an issue, whether it was setting up a new facility or any sort of maintenance issue or personnel issue, I could potentially get on a plane and go anywhere at any time and try to help out. So it's kind of I wore a lot of different hats, kind of a jack of all trades, but it was great. I was a young single guy and could wake up in one country in the morning and not know where I was going to fall asleep that night. And that was okay. That was enjoyable. So
yeah, sure.
That was a pretty good run.
So what made you leave that life? What was it that brought you into the real estate world originally?
There were a couple different things. Traveling around as a young single guy has a lot of upside potential, I guess. And I got married kind of along the way, and my priorities changed drastically after I did that. So instead of running around being an idiot, in God only knows where. Once I had a wife and actually, somebody I cared about, it was like, okay, I'm going to be back in my hotel at 9:00 and read a book, and I miss my wife, and it just wasn't the same, right? So that coupled with the fact that I just finished up a year of living in Hong Kong. The next year I was going to have to go to Shanghai and live for a year, and I had been to Shanghai. It's a cool place, but I didn't want to live there for a year. And so those factors it came time to just be done with that run. And it was a fantastic time. I got to see and do a lot of things that I would not have done or seen otherwise, but it was a good time to call it quits and try to find something else. And that something else happened to be real estate.
So how did real estate get on your radar? Because a lot of people change careers, change jobs, they settle down. A lot of times, the real cliche one probably is like, I was a bartender and I had this nightlife, and I worked at night and it was great and it was fun. I was single, but I got married and I wanted to get a real job. Like, not that you didn't have a real job, but what was it about real estate? How did real estate hit the radar? Why not, just go into a 9-to-5 corporate kind of a thing where you sit and desk?
Because I was just about 30 years old when I bought my first rental property. I certainly wish I had done it 10 years before then, but I'm glad I didn't wait till 10 years after that. But the real driving factor was I just couldn't see myself in any sort of corporate job for another 30 plus years, like so many people do. I knew it was going to be a long road ahead, and it wasn't a sort of a get rich quick overnight scheme with real estate. But I said, if I start buying properties, there's a good chance that I will be able to not be stuck in that corporate job for the next three decades, and just started building my little empire from there.
Was the first thing you did buy a rental? Was that your first dip into real estate?
Okay. It was when I was I had like 3 or 4 months left that I was living in Hong Kong, and this was really before. This was like 2007. So there were definitely websites and forums, but nothing like there is today with just so many podcasts and so many just easy to access free resources. I went on Amazon and bought like every real estate and property management book. I like Property Management for Dummies and Real Estate Investing for like the actual dummies books, and just because I had no idea what I was doing, bought all those and read them, and then when I got back to the U.S. A few months later, I just bought a duplex, owner-occupied duplex, and lived in one side and rented out the other, house hack style.
Nice.
Inherited some awful tenants, and that was my like immediate crash course into dealing with terrible tenants and that whole thing.
So all right. So the question I know I'm going to get, or I'm going to hear about is, so you did that first deal, you bought a duplex, you lived in one side, you rent out the other. Two things. How did you finance that? Did you just go straight up mortgage, like traditional mortgage, or did you have hard money investors? How did that work? No,
that was a very vanilla style deal. It was, I went to the bank and got pre-approved for, it was an FHA loan or something, 3.5% down.
Okay.
Pretty much paid full retail for the property. And this was, at the end of 2007. So the world hadn't completely come crashing down yet. So I bought at the absolute wrong time with pretty poor interest rate. And like, if I had to do the deal all over again, I certainly would not have done it. I still own that duplex today, which is now 12 or 13 years into it. And I think like just in the past year or two, I actually started turning a profit on that as a full rental property. So it was a great learning experience, but not so much on the cash flow side.
So we started about the same time, actually. You started in 2007. I started in 2008, which is the market had crashed a little more by then for sure. It was getting pretty bad. Was not a bad time, actually. But it's funny you talk about like there wasn't so much available and you went out and bought the books, the Investing for Dummies. By the way, did those books help? Were they helpful to you at all?
Yeah, I thought so. Maybe if I had read some different or better books, I wouldn't have made as many mistakes. But I mean, not knowing anything, and I mean, what else do you do, right? I had 6 or 8 of these books, and just kind of dove in. So
I did this. I did the same thing. I didn't read the books for dummies, but I would have. I just didn't know about them, I guess. But just I would go to seminars and like RIAs and things like that too, and people would come through and they're selling their book or whatever they're doing. You're right, and you're at that point you're just like a sponge, like anybody. It's like a sponge. So like you said, even so information is like, it's like revolutionary to you when you don't know anything. So it's all helpful. So that's good. So you bought that first duplex. You still own it. Now it's turning a profit. Congratulations, by the way. That's awesome.
Thanks.
12 years later.
If it turns a profit for the next 10 years, I might actually break even on it. So fingers crossed.
So what was the next move? You house hacked. I get it. It's awesome. You mentioned the tenant situation. Anyone who has rentals and have done rentals, I'm sure you've had bad tenants. So that's, it's a rite of passage almost when you start having rentals. What was your next move? What did you do? You did this. It worked. I mean, well, you got what you did it, right? I mean, I don't know if you considered it a success back then, but it worked.
Sure.
What was the next move?
I cobbled together a few more duplexes, kind of using the same strategy. And at the same time, I was really aggressively looking for foreclosures and either for flips or just to fix up and rent out, buy and hold. But I had very little income at the time since I'd left my electronics job. I left a pretty good salary. And I just had really no money saved up. So I was looking for all these deals that were going to cash buyers and going quick. And I didn't have any of that stuff. So with having no money and no real bankable salary, it takes a lot longer, obviously, to build out a rental portfolio. Again, not knowing some of the more creative strategies that I know now, not having the information available, I was just able to slowly piece together a portfolio. So I think I bought 2 or 3 duplexes, and then I found a pretty good portfolio at the time, like a 20-unit portfolio that I was able to get, I think, about 90% seller finance, 95% seller finance on. Nice. So that kind of propelled me a little bit.
Yeah.
But at the same time, I had started my own property management company. I figured, well, I have these rentals that even if it's just a handful of rentals, I still have to be available 24/7. I still have to have systems in place to deal with whatever the problems are for property management. And I thought, well, if I'm going to be married to my own properties, I might as well start seeing if I can manage a few for other people and generate a little income. So still not really having a good handle on what I was even doing. I just was like, I'm a property manager.
Well, let me ask you a question. So I get it. I have properties too, and my brain, when I started accumulating too many properties for me to feel what I felt like I could manage realistically and not be killing myself, my brain went to, who do I pay to do this? Your brain went to, I'm going to start a company that does this and then monetize it. Why not just go to the property manager route? Why not do that?
Because I really wanted to just be all in on rental properties. And I was working another W-2 job at the time, but I hated it. I really hated it. It was a similar sort of electronics production management. I floated around. I did a couple W-2 jobs just to pay the bills, but I just absolutely despised it. So I really wanted to go all in, full throttle on properties, and starting that property management company was just another step towards getting me there. And I built that out to, I think I was managing about 200 units by myself by the time it was done. I did that for like 4 or 5 years. And then that evolved to the point where I got paired up with another property management company in town that was much bigger and had a lot of the things that I was lacking. I was pretty much a one-man band managing 200 units and paired up and actually went to work for a bigger property management company that had I think 1,500 units at the time, but they had all the stuff I was lacking. So they had administrative help. They had an actual like brick and mortar office. They had payroll handymen, and like it was a whole network of people that I was missing. So I took my book of business, went to work for them as a salaried employee. At that time, I was pretty burned out, so I probably would have taken any deal they would have given me. But it worked out well because I showed up pretty much self-funded. I had all this business that I brought with me. And I'd had, 5 or 6 years of experience at this point. So I was pretty good at what I was doing. Yeah. And then from them, I got I was able to stay in the real estate business. I got a decent W-2 salary at that point. So I was bankable again. I could go and get loans. Sure. So that ended up working out really well. And at the same time, like around 2008, I also got my real estate agent license so that I could pursue my own deals. So like I had mentioned, I was looking for a lot of foreclosures. A lot of the stuff was coming on the market and was under contract within hours. So it was tough for me to find an agent who was really motivated to go show me, crappy $30,000 properties on a Saturday afternoon. So I got my license to be able to just do my own showings, to write my own offers, and ended up being a fairly successful real estate agent. I was doing, 30 plus closings a year for other people. And
were you representing buyers?
Yeah, I was representing buyers. I was representing sellers. That wasn't my intent at all. When I got my real estate license, I solely wanted to take care of my own deals. But, again, I think anybody that's started out in this business with next to nothing, you have to do a lot of different things, and you have to generate as many different income streams as you can. Yeah. And they all were real estate related. They all kind of, focused on the same thing. They're just different aspects of it. And it was just a way to, continue to earn money that I could then turn around and buy more rental properties.
So you mentioned briefly that you were looking for properties, foreclosures to possibly flip or something. Did you ever flip? Was that a part of your strategy at any point? Okay. No, not flipping.
No. I ended up, I really didn't sell anything up until just a couple of years ago. I ended up just, doing the BRRRR strategy where you just buy it and fix it up, rent it, and refinance it and
Gotcha.
do it all over again.
And you mentioned having 200 properties in your property management company. And I don't know if everyone heard it. I heard you say you were doing this alone. You were doing this by yourself? You had nobody helping you?
Yeah. I mean, I had 200 doors,
Wow.
and all of it, I had help in terms of, like, I had a pretty good network of subcontractors and people to do repairs. I was doing a lot of the repairs myself, but the stuff that I couldn't do, I was able to subcontract a lot of it out. But still, the only phone number to the business was coming through my cell phone. So all tenant calls, 24/7.
I mean,
I didn't even all billing.
I didn't even consider that you were doing some of the work. I was blown away that you were running the business of 200 doors by yourself. That is a lot.
It was crazy. Yeah, it really took a toll on me personally. And just for 5 years of doing that, my wife, just as a saint to put up with me, because that was probably pretty miserable. Or anytime we tried to break away and do anything, as soon as my phone rang, I was like, well, this day's shot. So let's go deal with this catastrophe. So if I had to do it all over again, I should have hired help sooner, but I was hesitant to do that. And I look back and see that it was so flawed that I was afraid that I couldn't afford to spend the money for help. Again, because I was just trying to cobble together all the cash I could to buy rental properties. And looking back, if I had taken a step back financially and just hired help, it would have, I think, propelled me a lot further. But anybody that's hired employees or has employees, the headaches that go along with that. So it was just kind of that fear of not being able to hire the right person and the expense of doing it. I kind of just want to keep everything to myself, which is something I still work on today. Is I've got to get better at delegating and not just taking everything and having to do that myself. So it was definitely flawed logic back then, but that's the way it went.
Yeah. You know what? Honestly, I tell people all the time, usually when people ask, they say, I don't know when to hire. I don't know when the right time is to hire. And I'll say, well, when do you feel like do you feel like you're ready now? And they'll go, well, I think I'm getting close. And I'll go, you probably are already past when you should have hired then, if you feel like you're getting close. Most people don't really make that decision until they probably should have done it a while ago. But it is tough. You get into that. I did it. I got in that circular logic of I need to hire to grow, but I'm not big enough to hire, but I won't get big enough if I don't hire. I'll never grow. It's like this weird circular defeating logic.
Very, very delicate balance. And I see it now with Open Door Capital, where we've gone from, in the past year and a half, it was just Brandon and myself, to now we've got a team of 8 or 9 different people. And a lot of those people are on payroll. And a lot of that payroll was extended pretty much by Brandon and by the company before we had adequate revenue coming in to cover it. So that's a fortunate place, I think, for us to be in, is Brandon was well capitalized and said, okay, I've got X amount of dollars that I'm going to invest in these people in this project, with the hope and the confidence that we're going to be able to generate the business to repay what he had extended.
Yeah.
And to keep that going. And so far it's working, but it's a significant risk. And, at the time, and I think a lot of people were like me, where I didn't have, I had, 10 cents in my bank account. Every day was just a struggle to hustle, because I just wanted to buy more properties and keep those afloat, and just didn't have a lot of cash reserves sitting there to say, here's 40 or 50 grand. I can put somebody on salary. But if I had put a little more thought and effort, and looking back, I could have been more creative and found a way to do that.
Sure. So I know you just mentioned Open Door Capital, and I definitely want to get there. I'm very curious and interested in that company. But between buying those duplexes and getting your real estate license, your realtor license, and all of that, what happened in that time frame of that 2010 to when you started working with Brandon? What was your life like in between? I know you worked for the property management company for a while.
Sure.
Where did your life take you in those years before Open Door Capital?
Yeah, it got considerably better as the years went on. Once I decided to go to work for that other company, and it just freed me up, physically, mentally, I had some more time to focus really on my own business.
Yeah.
I was managing a lot more properties with them, but again, we had the support staff, so I could go away for a weekend and the world wouldn't fall apart.
Sure.
I was making decent money, so I was able to get better loans. And the whole time, my entire goal was to just continue adding to my own rental portfolio, because at some point I wanted to quit that job too. I just wanted to sustain solely on my rental property. So I got to the point where I did have enough of my own properties that I was able to leave the management company, and I just went back to self-managing my own portfolio of units, which I think at that point was like 50 doors, which was a piece of cake at this point for me, because I had way better systems in place. I was using Google Voice numbers and answering service, and I had Rent Manager set up and could dispatch service requests to my handyman that had the Rent Manager app on their phone. Like it was on as close to autopilot as I could get it.
Yeah,
it was really to a point that I could operate that management company, my own properties from anywhere. So I was doing a lot more traveling. My wife and I went to Thailand for a month, and I was answering calls and returning, dealing with day-to-day business as if I was right back in the US, which was great.
That's awesome.
I had a couple guys kind of on payroll, not my payroll, but guys that agreed to take, if there was an emergency call and I couldn't get it, it would ring through to them, and they deal with the problem. So it really was dialed in as far as self-managing is concerned. And then I got to the point that I was doing some consulting and a fair amount of brokerage, and even got to the point where managing my own properties, as easy as it was, got to a point where it wasn't worth my time.
Yeah.
Where I had much higher and better use of my time. So I hired that management company, Main Real Estate Management. I hired them now to take back my 50 units and they manage them entirely, so that I was completely free to do whatever.
That's awesome.
Which was a great feeling, because it's like these different tiers of I guess financial freedom or rental property portfolio building. It doesn't happen overnight. I got to the point where each step was better than the one before it. I don't know.
Was your whole, I'm sorry to interrupt, but was your whole strategy the BRRRR strategy, or did you ever bring in private funds or anything like that? Or were you just
no, I did it all myself. Again, which, especially seeing now what partnerships can bring and how much more quickly one can scale when they bring in partners. I may have done that differently as well, but the entire thing was done just out of my own pocket, or my own, doing the BRRRR strategy where you'd add value to a property, refinance it, pull out some cash, and go and buy the next one and allow that to continue snowballing.
Let me ask you this, because I failed to ask you at the beginning, where were you buying were you buying these properties? What state were we in?
These are all in and around Bangor, Maine. So I'm from Maine originally. Okay. Like I said, I traveled around quite a bit, but I continually kept going back to Maine, and I had spent better part of 10 years, almost 12 years in and around Bangor, which is where all this stuff is that I'm talking about now.
Okay, when you bought these properties, I'm just curious, for the people who know the BRRRR strategy, or if you don't know the BRRRR strategy, well, let's just define that first of all, right? The BRRRR strategy is buy, renovate, rent, refinance, repeat. Is that the acronym?
Yep.
Yeah.
Yep.
So for those of you who don't know, so when you do that, when you did it, okay, because you did also mention a while back that you had no money in your bank at one point, right?
Yeah.
So it wasn't like you had this $500,000 you were going out and buying houses. You financed the first one. I get that. You add value. Were you able to pull out all of your original money most times when you bought the house, or were you because I can imagine at some point you put in 100,000 and you only get 70 back, and then you have 70 to work with, and then you get 50 back, right? It could dwindle, but you were able to actually get all your money back.
Yeah, for the most part, and it was a dry few years. The first properties I bought were the owner occupied loans. I wasn't able to build a ton of equity. They just weren't that kind of property. But after 5 or 6 or 7 years, come 2014, 2015. I just kind of had these things, and that's about the time I actually found the Bigger Pockets podcast, and was just completely reinvigorated by listening to all these guests. And I had a lot of real estate knowledge at that point, but a lot of the strategies and things that the guests were doing were totally foreign to me. I just had never heard of Subject to, or a lot of this creative stuff, and it really lit a fire under me again. And what it did is force me to take these properties that I had now owned for 7 or 8 years and been like, okay, I got them. They're there. They're sustaining. But I took a closer look at them and said, holy smokes, I've actually built some equity at this point, or I can refinance and pull out a little bit of cash.
Yeah.
And did that. And then that kind of gave me the working capital to go and buy. At the time, I was buying single family homes. I bought a couple for like $40,000. You put another 30 into them, and then they would appraise for 120 to 140.
Nice.
So, to refi and pull 80% of that out, I was getting all of my original cash back, and then a lot of times even more.
Yeah.
And if I didn't take it as actual cash, I'd get a line of credit on the difference so that I could pull that and buy another property. So that's something that I would encourage a lot of investors to do. At least, like, I found myself that I bought these things and just kind of put them on the shelf and never really tuned into them again. I mean, I was managing them and like hands-on, but as far as the financials, I should have paid closer attention, or I encourage other people, like, watch the value of your properties and watch, if you're able to refi or, do a loan modification for a better rate because the interest rates have dropped, 2% since you last got the loan. Look at stuff like that. And I'm not saying go crazy and over leverage and just pull out every penny you can, but be aware of what you have for equity and what your options are. Because I probably could have done that refinance my existing properties a year or two before I did. It just never even crossed my mind.
Yeah, that's brilliant. And I love it. What I love about it is you didn't have a ton of capital going into it. You didn't know about creative financing. The way you did it is there's really, like, anyone can do that. It wasn't unique to you. You didn't have any leg up or some special circumstance. Like, and it drives me berserk when people go, I don't have the money. I don't have the time. Like, nobody has the money and the time. Nobody, I mean, some people do, but a lot of people don't. And what you did, the way you did it, is very repeatable. Anyone listening to this virtually could do this. There's really no reason not to. So it's super, super, super relatable. And I love that about it. So this was your life buying. And by the way, you had like 50, you mentioned 50 at one point doors. Do you still have all the stuff, or have you like liquidated anything, and are you still buying equity?
40 something. I sold right before I moved to Maui 2 years ago. I had 3 or 4 of those single family homes that I had a fair amount of equity in, and it was a case that if I had mountains of cash sitting around all over the place, I would have just kept those homes forever. And, whatever, they might cash flow after everything's all said and done, maybe $100, $200 a month. So they were paying for themselves, and in 20 years they'd be paid off, and then I would own them. But I was looking at a few of those saying, hey, I'm making $100 or $200 a month right now, which is not a lot, or I could sell these things and clear, 40 something grand on the sale of one. And I could take that money and do something way better than just let $100 a month trickle in. So it was painful to let them go because I want to just buy and hold everything. But it didn't make sense to do it. So I sold a bunch of stuff, was able to restructure some debt, pay some stuff off, and redeploy some of that capital in better places. But for the most part, I still have everything. I think I sold four homes out of my 50 doors. So I still have the majority of it.
Okay. I think that kind of gets us pretty close to current day. When did you make the decision to sort of turn your life upside down and move to Maui and work with Brandon and start this new venture? Now, when some people turn their life upside down for the worst and they end up in a bad place. You ended up in Maui, which is not awful. Like I've been to Maui twice. My wife and I visit there every few years. It is heaven on earth. It is absolute paradise. It's beautiful. So it's not a sad story. But how did that happen? What made you make that kind of a major life change? Right? It's big time. Yeah,
it was a big life change for me. And I'm typically not a knee-jerk reaction sort of decision maker. I'll just lose sleep over something forever before I actually decide that, okay, this makes sense. I'm going to do this. But it was just under 2 years ago. Brandon had just bought a house out here in Maui, and I didn't know him that well. We have that park, the mobile home park that we own together in Maine. So we had been dealing with each other for a year or so over the phone and email, and he had come out to my house in Maine to do some due diligence on that park. But he just kind of randomly sent me a text one day, and he says, "Hey, I just bought this house in Maui. I need some help. He had a shipping container that had just arrived, and just some other like logistical stuff when you buy a house." He says, "Can you come out for a week and just give me a hand?" I said, "Yeah, sure. I don't know. Like, I've never been to Hawaii. I don't really know much about it, but let me book my flight before you change your mind." And came out for a week, which then led to pretty much staying for a month. And during that month, I mean, in the first 5 minutes, I fell in love with the place. I mean, Maui's just beautiful. My wife and I had been looking for some sort of change in the winter. We were just tired of Maine winters. We're looking for some sort of break, and we weren't looking to move permanently. We figured, if we can just find a place to go a month in the winter that's warmer, or maybe 1 week out of every winter month just to break it up.
Yeah.
So we had our sights, we had our eyes open for a change, but it wasn't nearly as drastic as what ended up happening. And over that month of staying here with Brandon, just kind of hatched the plan that, hey, I would love to leave Maine. I'd love to live in Maui because it's great. And at the same time, Brandon had a need he was looking for an assistant. He was looking for people, someone to help with, just his day-to-day administrative stuff and help with filming some of his Bigger Pockets videos, and just pretty much personal assistant. And so I took that job. So we hammered out a job description that worked for me, and a salary that was certainly a step back from the money that I was making now in Maine, but I knew that the long-term potential to make things happen out here was much higher, and the quality of life is off the charts. I mean, it's fantastic. We love it here. So
That's
so I went
awesome.
home pretty much just long enough to sell all my stuff, list my house for sale, grab the wife and dogs, and we all jumped on a one-way flight and came back out here.
All right. You said something that piqued my interest, because I know you're into this. This is something you guys do, but how did you get from the BRRRR strategy, buying duplex, buy and hold? How did you jump to mobile home parks? Where did that come in, and why?
That was pretty much all Brandon's idea. He had been looking for mobile home parks before I was involved, and that's really how I got connected with him. Is he 3 years ago was looking publicly. I mean, he was mentioning it on the podcast, and every time he spoke, he was on the hunt for a mobile home park because he had a 1031 exchange he was doing with an apartment building, and he was looking for a mobile home park. That was the asset class he decided that he was going to tackle, and that he liked it for a bunch of different reasons, and just went for it. And when he put out the call for what he was looking for, I happened to find a park local to me off market that fit his criteria exactly. And when I got the information on that park, I kind of sat on it for a day or two and was like, yeah, there's no way that like Brandon Turner is going to want to buy a park here in Maine, but I have nothing to lose. I'll send it to him, and we ended up partnering on it and buying it. So when he wanted to continue his mobile home park acquisitions, I had, at that point, 10 years of property management experience, and a lot of that property management experience, although I hadn't owned any parks, I had managed a lot. So I spent a lot of hours down in the dirty, disgusting trenches of mobile home park management. So, I had that going for me in a sense of, I was a valuable asset to him as far as like looking at parks, evaluating parks. We weren't sure what we were going to do for management at the time when we started buying stuff. So I was a good fit for the role that he was looking for.
So the management company that you worked for a while, they managed. Some of it was mobile home units.
Yeah.
Okay.
Yeah. So they did a lot of apartments. They did HOAs. They do mobile home parks. They do a little bit of everything. Okay. So I had a pretty broad spectrum of experience in management. But,
interesting.
A couple of mobile home parks were kind of quote unquote my babies.
Okay.
I don't know if it was a blessing or a curse.
Yeah, I was going to say that. I don't know if that's a good baby or not a good baby.
I don't think they thought very highly of me when they gave me those projects.
It's a hazing. It's a form of hazing in the property management world.
The guy sticks around through this, he'll do anything.
That's hilarious. So so managing, I would imagine, and correct me if I'm wrong, I don't want to put words in your mouth, managing a mobile home park or being involved in the management of a mobile home park is much different than valuating them and all that. Two questions. How did you learn how to come up with the values and know what is a good price? And then how did you know that this place was available off market?
The first one you're talking about?
Yep.
No, I went to I went to a real estate meetup, just a informal sort of real estate meetup that our area at the time didn't have a local meetup. Excuse me. There was a guy that started one. It was super informal. It was like 7 people in his living room, just kicking this thing off. And there was another investor there who kind of offhandedly had said, "Hey, I've got a mobile home park for sale." And that was at the same time that I knew Brandon was looking for one. And I looked over at the guy and said, "Well, hey, can you send me the numbers on that thing?" So to put a valuation on a park, it's a little different than an apartment complex in terms of there's usually a lot more variables. So when we're looking at parks, and the small park in Maine was kind of the test bed for the idea. And I mean, we certainly didn't invent this asset class. We didn't invent investing in the asset class. There's a lot of other people that do it, but this was our first, like, hey, let's see if we can actually pull this thing off. But we bought this park with, it's a small 50-lot park, and it had, I forget exactly, but I think there were 10 or 12 vacant park-owned homes, and then another 10 or so vacant lots. And the real value add strategy for us in mobile home parks is we like to buy it on existing value. So we're looking at the income, just as you would with anything else, looking at the income and the expenses and the NOI, and then you can kind of calculate a purchase price from there. But our real concern is what can we do with this thing in a 3 to 7 year hold period. Right. And a lot of the value is not so much as going in and cranking up rents, even if they're below market. We just don't like to do that. It displaces people. It's a great way to end up on the evening news. Like, it's just a bad thing to do. Yeah. So we try to stay away from that. We try to keep the people that are there in place. We want to keep them happy. But the real value add is filling the vacant lots. So we had those 10 or 12 vacant mobile homes that we renovated and sold off to tenant buyers. And then in the meantime, filled, it was 8 or 10 vacant lots where we actually bought homes, brought them in, got them set up, renovated them, and then sold them off to tenant buyers as sort of, they were turnkey properties. They were older homes at that point, but we went through all the plumbing, electrical, heating systems. Everything was up to code and good. Yep. And, that's really our goal, is to get all of the homes converted to tenant ownership so that they are responsible for their own repairs and maintenance. They're responsible for their own home. They have a lot of pride of ownership, which is a little different than what you see from apartment tenants, because they don't own anything. The mobile home owners actually own and have pride in their home, and then they pay us lot rent. So it's great for us in a sense that it's once you get the park stabilized, it's fairly easy to manage because you don't have a ton of repair and maintenance headaches. Sure. Certainly we're responsible for the infrastructure in the park, the water lines, the sewer lines, the roads, maintaining the common areas. Yep. But it's easy in a sense of there's no real repair and maintenance expense or headache. So they're just paying lot rent. And by filling those vacant lots, every one that we filled would activate a, say, $300 per month lot rent that wasn't there before. So you do that, 10 or 15 or 20 times, and we've added some significant value to the park. Definitely.
Do you guys still own that park? Is that still something you've seen?
Okay. Yeah, we love it. Yeah, it's great.
And then have you since repeated this and done and bought more of these of that asset class?
Yeah, so that was, like I said, that was just myself and Brandon and a couple other partners on that one. And now, that's kind of outside the Open Door Capital scope. So once I moved out here a year and a half, 2 years ago, we really got serious about Open Door Capital. And that is Brandon's company that now exclusively buys mobile home parks. And we have a couple different funds. So it's a whole different animal in terms of we're raising investor funds in a 506c offering. And we've got right now, I think we're at about 600 lots under ownership, and we've got a bunch of stuff under contract right now. I think if we were to close on everything we have under contract right now, which is never quite happens, we want to, but something always ends up falling out for one reason or another. It'd put us at about 1,500 lots.
When you say 1,500 lots, you mean individual mobile home lots. Spots, not parks, not.
No parks. It'd be, 10 or 12 parks.
Gotcha.
With a total of 1,500
Gotcha.
or so.
Is this, okay, so now we're in Open Door Capital. You guys are, you work in that company. You were the VP of Acquisitions.
Yes.
We're only laughing because we were joking about it ahead of time because there's some conflict online about what his
notice title is. Frequently.
Yeah, that's okay. Hey, as long as you're VP, it's VP of anything, right?
Yeah.
So what does Open Door Capital exclusively invest in mobile home parks, or does it do other things?
That's really it. Brandon does. He has another partner here on Maui, and they do some sort of one-off single-family home flips, which is technically under Open Door Capital, but it's a different sort of entity.
Gotcha.
So yeah, exclusively for what we're talking about here today, we're all in on mobile home parks. So we're not buying apartments, we're not buying commercial, we're not buying anything other than mobile home parks.
Okay. You're VP of Acquisitions. Intuitively to me, I'm assuming you're the guy who's actively looking for these parks, the opportunities. Can you talk a little bit about, not to increase your competition exponentially, but what do you look for? Where are you looking? What do you look for? How do you know you found a good opportunity, and where are you finding the opportunities exactly?
Yeah, it's pretty competitive right now, only because a lot of people are just looking for the same thing that we are. And like I said before, we certainly didn't invent this. We just think that we can do it a little better than a lot of the other people out there. So we're primarily looking for parks that are at least 100 lots or larger. And we want public water, public sewer. There's some great deals out there on parks that are private utilities. We just don't want the hassle. We just don't want to take them on right now.
Okay.
And we've been able to find plenty of deals with public utilities. So we're sticking with that for now. We want a solid, preferably increasing population. So we want to see 100,000 people within a 10-mile radius of the park. More is certainly better. We've got one under contract in Florida and a couple others right now. The surrounding population is 500,000 to a million. That's great, but we want to see it increasing or at least stable.
Sure.
We don't want to see a sharp decline. We would prefer to see a majority or all tenant-owned homes. As I was talking about before, tenant-owned homes are just easier to deal with. But most times the parks come with some level or some amount of park-owned homes. So that can be a challenge with the lending institutions. It's tough to get bank loans on park-owned home income. So because mobile homes are personal property, they're not real estate.
Yeah.
In a nutshell, the lenders, they will discount any of the rental income generated from a park-owned home. They love the lot rent. They'll account for the lot rent, but they'll discount and not put any value at all on the park-owned home income, which is tough. If you have a park that's primarily park-owned homes, the seller is valuing it on all this money that he's getting.
I was going to ask you that. They want to value it.
Yeah, rightfully so. I mean, it's good money.
Yep.
But in the bank size, they won't apply that towards the value. So you usually have this huge gap in what the seller wants and what you can get for debt on it, which means either, you've got to come up with a lot more cash, and a lot of times it doesn't make sense to do that.
Yeah.
So for as small number of park-owned homes as possible. And that's really our firm criteria. And from there, we're looking at overall condition, and obviously we've got promoted returns in our fund, so that any of our acquisitions need to pretty much generate our promoted return right from day one. So we're looking for stuff that will cash flow right out of the gate, but still have some meat on the bone for infill. So ideally our occupancy level would be at that like 70 to 80% occupied, so that we can go in and operate it as is, and it does well, but we've got 20 or 30% of the infill that is still there to add value to the park.
So if I'm someone who says, oh, wow, buying mobile home parks, I've never thought of that. I want to do that. I have a W-2 job. I'm making $100,000 a year, but I want to replace my income. I know it varies. I'm sure of that. But on average, how many mobile home parks does one need to purchase in order to generate $100,000 a year in income?
It really depends on what the strategy is. So there are some local operators, like the guys that will buy a park local to them, and they're going to manage it, and they're going to do as much of the maintenance as they can. They're going to be very hands-on. I mean, one small park could earn you 60, 70, 80 grand a year as a replacement for your W-2 income, but it's taking up a ton of your time. So if you want to invest more on a sort of a passive approach, then it's going to take a lot more parks, or a lot better deal on that same park, to the point where you could afford to have third-party management and be more hands-off and just have it passive. A lot of the investors in our funds, and I guess all funds, or a lot of syndications, are people with good W-2 income that maybe they enjoy their job, maybe they have no ambition of quitting, but they want to invest in real estate. They just don't have the time or the knowledge. So a good solution for them is to invest in somebody else's deal, invest in a fund, get that passive return. So they're kind of, they're involved in real estate, and they can look at it from the sidelines and continue doing what they do best, which is their W-2 job, and earning that income there, where they just turn around and invest it in other deals. So
for Open Door Capital, are you, and I know I don't want to get in FCC issues here, but how do you find investors that qualify, or that you can? Do you guys go out and actively look for investors? So it's a
506C, and it's SEC that regulates that. So because it's a 506C, we can openly promote it, we can advertise it. But the catch is that any of our investors need to be accredited investors. So you've got to meet a certain threshold of income or net worth to invest with us.
Okay, so. Is that being accredited? What exactly does that entail? Just
it's $1 million net worth, or I'm going to get this wrong and look foolish, but I think it's $200,000 in income per year for the past 2 years as a single person, or I know I'm going to get this one wrong, $300 or $350 a year as a couple.
Just a general. Okay, that's cool. So anyone who meets that criteria,
clearly defined. I should know it, and I wasn't able to rattle it off here.
That's all right, no problem.
We got guys on our team that can.
Yeah,
that's why they're out working, and I'm here talking to you.
Yeah, exactly. No, that's cool. It's good to know. So you are. So if someone is listening to this and they're like, hey, I love what you have to say. I love what Ryan's saying. I love Brandon. I know him and love him with Bigger Pockets. I trust him.
Yeah.
Like, I want to get involved with these guys. I have money. I'm accredited, or I could be, or whatever.
Yeah.
They can reach out to you and get
Yes.
that process started. Okay, cool.
Yep. So we have Mike Williams. He's our dedicated investor relations guy, and he loves talking to people, loves educating them about what's in the nuts and bolts of our fund and what they need to do on their end to qualify, and the documents that they need to submit to show that they're accredited. So
Okay.
That's right in his wheelhouse.
Awesome. Are you, other than Open Door Capital and what you're doing with them, are you doing anything else just on your own, acquiring properties, buying holds, nothing like that?
No, not really. I'm all in on this
in.
right now, and we have been able to assemble such an incredible team of talent. I had mentioned Mike, and we've got Walker Meadows, who does most of our underwriting, and he's just an absolute wizard with Excel and underwriting, and just loves that kind of stuff.
Yeah.
We've got Brian Murray, who wrote Crushing It in Apartments and Commercial Real Estate. He's just an invaluable resource, him and his wife, Tricia, both. He's been in a lot of syndications, both on the GP side and the LP side, so he's got a ton of experience there with a lot of the technical stuff that maybe some of us on the team who haven't done as much as him, we rely on him a lot. So yeah. It's a fantastic team, and that's something that really still just astonishes me every day, is being involved with Brandon because of the reach and just the enormous size of his platform. He is able to attract just some extremely talented people, people that not only talented, but are fun to work with and love the job and love what they do, and very good at whatever their specific role is. And they're also, happy to help out if somebody else is getting crunched in their job. So everybody will kind of help out everybody else, but they have their clearly defined roles.
Yep.
And these are people that I would not have been able to assemble in 20 years of banging on doors by myself. Yeah. But because Brandon's trust and just his notoriety, it's such an asset for us to be able to attract that kind of talent, which makes my life a lot easier.
Can I ask you, and I don't want to get deep into things that you don't want to talk about, but you just mentioned Brandon's reach. Obviously, we know he's the host of Bigger Pockets podcast, and he's super involved in that community. Everyone knows who he is. How hard is it to find deals? Are people just sending you guys deals every single day? Like, hey, check that. Like, kind of like what you did, right?
All the time. Yeah. So, I mean, we ran a promotion. We started a couple months ago. It's bringbrandonAdeal.com. And what we're looking for is any off-market mobile home parks that somebody knows about. We've got great broker relationships. We see everything that's listed, and we bought a lot of listed property. So there are still opportunities there. But what we were really looking for is an off-market park. And so we rolled out bringbrandonAdeal.com. And what we are promoting is that if anybody out there brings us an off-market mobile home park, and when I say brings us, all we need is a warm introduction to the seller. So we don't need it under contract. We're not asking them to broker a deal. All we need is the intro to the owner. So whether it's an email or a phone call, just a name and a phone number, we'll take it from there, and we'll run with the property. And if we close on it, we'll write the person that gave us a lead a check for $50,000. So
50.
Wow. Yeah.
Wow.
So $50,000, which is really generated a lot of leads. I think we have we've gotten hundreds of leads that come in. Most of them just don't work out from one way or the other, one reason or another. But we do have, I think, 2 parks under contract right now that are looking like they are going to close. And I will be absolutely thrilled to write somebody a check for $50,000. I mean, that'd just be fantastic.
So in my scenario from earlier, if I want to create $100,000 in income, I just had to find you guys 2 deals a year.
Find me 2 parks. That's it. Yeah.
Come on, guys.
We have some people that really gone nuts with it. There's, the intent of promoting that was not to really harness a professional wholesaler, because we have some great relationships with full-time professional wholesalers that are really good at what they do. What we were looking for is maybe just the newbie, the casual Bigger Pockets listener, follower that just kind of overheard at the 4th of July cookout that their uncle's buddy is selling a park, and we want that guy, right? And he would be thrilled, or girl, they'd be thrilled to get a check for $50,000. They're not professional wholesalers. $50,000 is a lot of money to them, and
sure.
If it finds us a great deal, we're happy to do it. But some people have really gone crazy in a sense that maybe they weren't professional wholesalers before, but now they've got hundreds of mailings going out every month, and they're getting lists and calling on our behalf, and really putting an effort into this, and it's going to get some people some big checks.
Wow. That's pretty incredible. You said 50,000 so fast. I want to make sure you didn't say 15 or something.
No, 50.
Wow, 50,000.
Yeah.
That's worth putting out some postcards and beating some bushes to try to find a deal.
Yeah, for sure,
guys.
So we get leads from all over. I mean, people are just always sending us stuff, and we're happy to take a look at all of it. And we've got our criteria, and we've got our returns that we have to stick to. But
that's amazing.
we've certainly found some great deals that people have just sent to us.
All right. Gosh, that's amazing. I'm always amazed at the ways that you can make money in real estate. And I think I've just heard a brand new one, and that's bringing Brandon a deal and getting a $50,000 check when you guys close on that thing. Wow. That's amazing.
Yeah. Yeah. And again, it goes back to just, Brandon's reach and his platform. And, so many people know him and trust him. And with that goes a tremendous sense of responsibility, especially to our investors. I mean, we have a lot of investors in our fund that are there. Maybe, I mean, the returns and all the documentation for the fund, like they can read through all of that, but a lot of them are here just because they trust Brandon. Yeah. And I think that's the case. And a lot of it should be if you're going to get involved in a fund or a syndication deal, you really need to trust the sponsor, regardless of, what all your calculations say. Like, you need to trust the person or the team that's sponsoring the deal. And a lot of people trust Brandon, perhaps people that have never even met him face to face, but they've been listening to him on the podcast for the past, whatever it's been, 8 or 9 years, read his books. Like, a lot of people feel like they know him, and because of that, they trust him. And he and the rest of the team have a huge sense of responsibility not to tarnish that trust, because as long as it's taken him to build that, we can flush it down the toilet in a heartbeat if there's a misstep or we make a mistake. So we're ultra sensitive to that, especially when we underwrite deals. Everything we do is we try to be as conservative as possible, because we need to preserve and maintain his trust of people. And he's a humble, genuine, like what you hear on the podcast. That's him. Probably the most generous person I've ever met, and we don't want to tarnish that.
Yeah, bad news travels a lot faster than good news, unfortunately.
Oh, absolutely.
So if people are listening to this, first of all, first question, do you have to be an accredited investor to invest with you? I know you.
Yes.
Okay, you have to be. So you need the $1 million net worth and the 200,000 single. Okay, good.
Yeah.
Okay, that I want to catch. So if I am that person, or if somebody listening is, hey, that's me, I have that, and I know this isn't your department, but how much does a person need to invest minimally with you guys?
Right now, the minimum investment is $50,000.
$50,000. Okay.
Yeah.
That's actually not that bad. It's pretty good.
Yeah, and that's right now our second fund is open, and it's $50,000. We're going to be kicking off Fund 3, I think, pretty quick, and we don't have it dialed in. I think the minimum is going to be the same amount, but stay tuned. We may have something different in the next couple of months.
That's awesome. Listen, Ryan, and this has been a lot of fun to me. I have not met you prior to this. I love it. You have such a varied background, cool background, done a lot of things, and now you guys are just crushing it. And I appreciate your time. I'm glad you jumped on here. I'm glad I got a chance to meet you. When I found out you work with Brandon, it's like a no-brainer. I know you're a good guy because I've known Brandon for a long time, and you're right. He is exactly the guy that you talked about. Super generous. He's done everything I've ever. I've reached out to him a few times in the past. Said, hey, can you help me do this thing? And he's like immediately on it. He's just a good dude.
Yep. So, fantastic. So I really appreciate the opportunity to come on. I enjoyed talking with you.
Yeah, this is fun. And the mobile home park world is interesting to me. It's nothing I'm going to go in and compete with you anytime soon, because I've got so much going on, but I've got too much, but I've always found it super interesting. So yeah, I love hearing about it. I'm fascinated by it. And it sounds like an awesome asset class. And obviously you guys are having a lot of fun building your business. So if anybody meets that criteria and want to get involved, reach out. And I'll leave all the links to everything you mentioned, people that are on your team and your website and all that. So, and we'll make sure that people know. So the website, I have it open actually on my computer. It's Open Door. Yeah, it's OpenDoorCapitalLLC.com.
Yeah, or you can just go to odcfund.com and it'll redirect you right there. So ODC, like Open Door Capital Fund, FUND.com. It'll take you right there. And all the information for our funds and everything's right there for you to see, and team bios and everything. So go there and check it out.
Awesome. It was great talking to you. Thank you for jumping on with me. I really appreciate it. I know you are actually, we talked before we went live, you're babysitting right now, Brandon's kids, because it's his anniversary. So, you know, good luck with that. Don't screw that up. That could be a bad career move.
My wife's there. All I have to do is stand here and guard the pool, make sure nobody falls in that's not supposed to, and I'm pretty good at dialing 911.
Perfect.
My wife's got the rest of it under control.
and they won't hear this until after they're back anyway.
No,
so
everything's fine.
Everything's
if
good.
something does happen, let's not air that part, okay?
All right, man. Well, listen, have a good rest of your day, and it was great meeting you, and good luck in the future for whatever you guys do.
All right, man. Really appreciate it.
All right. Bye-bye. All right, that was a lot of fun for me. I enjoyed meeting Ryan and getting to interview him and learn about his life. He's done a lot. He's been an agent. He's done the buy and hold thing. He's, bought the duplexes and did the house hacking where you buy it and you live in half and you renovate it, move in the other half and all that stuff where you kind of add value. So that's awesome. And now he's went on to bigger and better things. He is running the fund there where they're buying mobile home parks all over the country. And he shared with me at the end, I think it was off when we had already turned off the mics, that he's flying out to Alaska to take a look at a mobile home park there. So a lot of cool things that they're doing. And of course, he's in business there with Brandon Turner, a buddy of mine from Bigger Pockets. And Brandon's a great guy. So I know anyone associated with Brandon is also a great guy. And that's why I wanted to have Ryan on and talk about what they were up to. And I was not wrong with my instincts. Ryan's a good guy, knows what he's talking about, smart guy. So if you are someone who's interested in getting involved in their investments, reach out to him and see if it's a good fit. So hopefully you guys enjoyed that. I love talking to good people who are doing awesome things, and today was no exception. So if you were inspired by that to get out there and get going, then awesome. That's the whole goal of this podcast. And really, you know it, I know it, everyone knows it at this point. You know what I'm about to tell you. Guys, you can't do anything until you get started. So get out there and just start. Make today the best day of your life. Get out there and do it. You can do it. Go for it. All right, we'll talk to you soon. Okay, you're still there. You're still listening. That's awesome, and I really appreciate that. Now, hopefully it wasn't an accident. Hopefully you didn't leave the room, and I'm just talking to an empty room right now. But assuming you're still there, I want to do something really, really cool for you. For a limited time, I want to give you a free digital download of my book, the entire book, Level Jumping. If you're a listener to the show, you know it just came out, and it really details how I took my business from being like one where I was just doing a few deals a month, maybe 1 or 2 deals a month, to doing over 10 and sometimes 15 deals a month and over 100 a year. And I went from doing very little profit to over $1 million in profit. And I made that transformation in a 12-month period. And this book talks about what I did, the steps I took to transform my business, and how you can too. So grab a free digital download, and you can get that by texting the words "just start" as 2 words now, "just start" to the number 55444. So text "just start" to 55444. I will send you a free digital download of my book. It's the complete book. There's nothing held back, and that'll be completely yours just for making it to the end of the show and listening to me. And I really, really appreciate it, guys. So I want to do something nice for you. I do this every once in a while at the end of shows, and if you listen to the very end, every once in a while, I do a giveaway like this. So hopefully you enjoy that. Go grab a free copy. I hope you read it. I hope you love it. Reach out. Let me know what you think. All right, guys. Talk to you next time.